All right, hi everyone. Thanks for joining us today for this week's market talk. My name is Ryan Huang. I'm the market strategist at IG, and I'll be joined later on by my colleague Nabil Mata, Premium Client Manager. So today we'll be taking a quick look at this week's macro events, and Nabil will run through some of the charts to look at what are some of the interesting technical levels to look at. So I'm just going to test all the sound levels to make sure everyone can hear me clearly before I proceed. So if the sound's okay, please send me a message just to say you can hear me clearly. Okay, so first thing, I'm sure you've seen this before, disclaimer. Okay, just going to run through this with you quickly. CFD are leveraged products, and today's session is really just ideas. Please don't take this as specific advice. It's not tailored to any specific individual, and we are not customizing this to anyone's financial background. So this is purely just for information and education, and IG does not take responsibility for any use of this information and any consequences as a result. Okay, so let's move on to this week's big macro events to look out for. If you've been following yesterday's macro events, we had some China data out. Other things to look out for will be some macro data from the ECB. And you can see this shopping picture in the bottom right. That's the US retail sales. And the other big theme I'll be touching on later is oil prices. So we've been noticing that it's been drifting lower. So what are some of the potential plays coming out from this fall in oil prices? What does this mean for investment opportunities? So all these calendar events can be found on our IG economic calendar, but I've for convenience sake, I've captured everything into this PowerPoint slide for a quick overview. So yesterday, China trade numbers, and today we've got GDP that was out just 2 hours ago. It was actually pretty okay. And I'll run through each day in specific later on. So I'm just going to run through this very quickly. Things to look out for, I've highlighted in red: China CPI tomorrow, US retail sales tomorrow, European CPI on Thursday, and some investors are also interested in the US Beige book that's out on Wednesday, late night, Thursday morning. So I'll just jump into today. So of course, if you've been watching the markets closely, there's a lot of things happening right now to drag down market sentiment. You've got the European global growth concerns, and IMF and the World Bank cutting on global growth outlooks. And that's been weighing down on a lot of investor sentiment. That's why you're seeing this red in the market. A lot of markets not doing well today over concerns that Q4 and next year companies are not going to be performing as well as expected. So a lot of concerns as well in Hong Kong, the pro-democracy protests. That's still leaving a air of uncertainty in Hang Seng. So right now there's a bit of a conflict between pro-democracy and pro-Chinese, pro-China protesters. So the latest news is that there's a bit of a skirmish. They're tearing down the barricades, but most indications so far point to it being a bit peaceful, pointing to a peaceful resolution. And then you've got the Ebola crisis as well. That's sending a bit of jitters into the markets as well. Okay. Just getting a bit of feedback that the slides are not updating. Okay. If there's any problem with the slides, just send me another message. So if you can see right now, my slide is on Tuesday's events. Singapore GDP. And then later on today, you've got the UK CPI. That's at 4:30. And then one important indicator from Germany, that's a ZEW, Economic Sentiment Gauge. That's coming out at 5 p.m. And the Eurozone Industrial Production Figures, that's 10 a.m. So UK CPI, depending on what type of figures you get, that will have an impact on, of course, the pound and the FTSE. The one that I'm actually interested in to watch out for is the Germany economic sentiment. There's been a bit of bearish data coming out from Germany recently. We've got some potential technical recessioning happening with a fall in exports and thus production. So this is going to be another signpost of where Germany and the rest of Europe could potentially head towards. And you've got Mario Draghi from ECB warning that the European growth might not be as strong as what the market is expecting. And tomorrow is going to be more interesting. China data, always something to look out for. Yesterday's trade numbers were better than expected, but if you are watching the headlines today, there's a lot of doubts over whether that data is actually accurate, because some market watchers are measuring Hong Kong imports and China exports. Those two numbers are not matching. So there's this feeling of doubt that there's over declaration of export numbers and the books might not be 100% accurate. So people are taking that positive data from yesterday with a pinch of salt. So tomorrow's data on CPI, if that comes in better than expected, the market consensus is at 1.7%. If that's better than 1.7%, we could see a bit of uplift for oil prices, the China A50, and even the Hong Kong HS50, which is the Hang Seng Index. And later at night, we've got US retail sales. The market consensus forecast is for a decline of just 0.2%. So any better numbers than a dip of 0.2% will be good news for US indices and any dollar crosses. And we'll touch on the S&P 500 later on to show you some milestones that it's hitting just over the past few days. This week we're going to get a lot of US macro data, so S&P 500 is going to be a very interesting one to watch out for, and Nabil will be going through some technicals with you if he has time later on. So US Beige book tomorrow. Recently we've been seeing a lot of macro data from US. It's actually pretty optimistic, and just only in the past few weeks the global picture has been changing slightly more bearish. So tomorrow's Beige book will give a very good indication of where the US outlook is, where the US is seeing its outlook for the near term. The most recent Beige book was pretty positive, so there's some expectations that this will be along the same lines as well, or at least flat. So of course this will affect dollar crosses, Dow Jones and S&P 500. And tomorrow's Eurozone final CPI. Of course, the Euro's been on a bit of a downtrend towards the dollar. So tomorrow's consensus forecast, we're expecting it at a rise of 0.3%. And of course, the ECB's medium-term target is just slightly under 2%. So still quite a long way to go to 2%. So this is going to be something to watch out for. Any disappointing numbers that's either negative or very near zero is going to be bearish for the euro, because ECB is likely to do more easing measures. And US jobless claims is another indicator for the market, for the economy in the US. Consensus forecast is for 291,000, but pretty much any number near the 300,000 marker is a positive gauge, because that's near or above the historical average. So that will show some signs of stability in the employment market. So we just need something between 280 to 300 to have some positive sentiment. Any numbers below that kind of frame will be bearish sentiment for the dollar and the indexes. And tomorrow on Friday, Slightly less market moving. We've got building permits and Michigan Consumer Confidence Index. For those of you who want to really look at the pulse of the US market, this is something interesting. But otherwise, this doesn't traditionally move the market quite a lot. And I was talking about the S&P 500. So if you look at the charts over the past 2 years or even just past few months, you might have noticed that S&P 500 has been following a bit of an uptrend in the channel. But it's hit a bit of a milestone recently. It's pushing new 5-month lows and it's broken its 200 DMA. So clearly a potential breakout. So Nabil will drill into this in more detail later. So I'm just going to go to other possible ideas you can look out for in the near term. I mentioned just now Hong Kong, Ebola, European Central Bank, world outlook, all getting a lot of uncertainty. So the volatility index is one favorite to look at when there's such uncertainty. So it's already showing some signs of picking up some traction. So over the past week, you've got all these news coming out and it's been jumping ahead to 8-month highs. I think just last week it jumped 24%. So the bias for volatility index or VIX is on the upside for now. There's so many things still left unresolved. So the big theme this week that I'm going to touch on is oil. If you've been watching oil prices, it's been drifting lower and lower over the past few weeks. I think we're hovering around the $85 per barrel mark at the moment. So that's, if you can see at my chart, a bit of a bearish sentiment weighing on it. And if you want to retrace back to when we last saw $85, you have to go back to at least a year or even 2 years ago if you want to look at lower levels. So these are levels that we've touched before, so we can't rule out that it's going to drift any lower than this. And of course, some of the factors driving this is people are speculating there's oversupply. And then of course, the Chinese picture not doing so well, so global economy, we don't need so much oil. That's the outlook on driving the sentiment lower for the oil demand. So oil prices going lower, that's bad news for companies who depend on selling oil-related products. And one of the bearish companies or bearish sentiments weighing on companies is Sembcorp Marine. If you can look at the charts on the screen, you can see it's been on a bit of a downward trend, and it's been capped by a downtrend line. So overall sentiment on this is still bearish, and the other counterpart to this is Keppel, but Keppel is less exposed to oil prices because it's got diversification in real estate. So these are two companies that you can look at more closely if you want to take advantage of any oil price fluctuations. The other one is in Australia, Santos. You can see this downtrend line really clearly at the tail end. It's broken through a few key resistance levels, and I've drawn this Fibonacci retracement. It's approaching the 61.8% level after breaking through 50%. So still possible downside ahead. So this is a company listed in Australia, and its other counterpart is Oil Search, also listed in Australia. And these are the key themes to look out for again. So just a quick overview before I pass on to Nabil. Yesterday's China's trade numbers better than expected, but investors not really convinced yet. Today is some Singapore GDP, usually not market moving. but it's a good gauge to tell how regional trade and demand is doing. So it came in pretty positive. It was at year-on-year 2.4%, quarter-on-quarter 1.2%. Tomorrow, China CPI, US retail sales to watch out for, and on Thursday, European Union's CPI data, quite likely a bearish note for Euro. And if you have any questions, you can send them to me across now. I'll just wait for a couple of minutes for the questions to come through. Okay, I have a question on gold. Is gold going to be more bearish with what's going on this week? So gold traditionally seen as a safe haven asset, and we've seen that being played out in the markets this week. Just last week we had it at around the 1205 level, and we are looking at it at 1230 this week. So clearly this has been driven by a lot of the uncertainty pushing investors into a safe haven asset play. So if is gold going to be more bearish, this will depend on some of the indicators out this week. So quite likely, with all the uncertainty playing out, the stock markets still being weighed down by this bearish sentiment, this has more upside bias for gold. That would be the takeaway. But it's not going to run away spectacularly. It's still a bit likely to be a bit choppy. So that was a question on gold by Sharon. Thanks, Sharon. Okay, we've got another question from from Tian Beng Yak. So outlook for Shanghai Composite, I assume, and Hang Seng Index. All right. So if the big I guess sentiment weighing down on these two is Hong Kong protests. Hang Seng Index is I actually find it quite interesting because it's got some technical levels that is approaching and is finding a lot of resistance against one particular level. I think I'll get Nabil's help to run through this Hang Seng Index technical levels in a bit. So that will give you a much clearer idea if you have a chart to look at. But overall, there's a cap on how much you can run up because of a resistance and all the overarching atmosphere of uncertainty. Yes, so there's someone's pointed out there's going to be a tie-up between the Shanghai and Hang Seng Index, or Shanghai and Hong Kong, for the connect. So that's been on the, I guess, discussion for quite a while now, and that's seen these two markets rallying up a bit. So a lot of this, I am expecting this to be priced in by now. So until this really happens and we see this officially taking off, I don't think there's going to be any more upside on this news. So this is something to watch out for on 27 October, but I don't think there's going to be any more upside towards 27 October.